It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Good morning. We are counting down to the open up markets in Greater China. Our top stories today: Asian stocks rising, treasuries sliding as traders trimming bets for a Fed rate cuts following a stronger than expected U.S. jobs report.
The so-called AI scare trade spreads to this region, with real estate services, biotech stocks tracking declines among peers on Wall Street.
Meanwhile, we'll be watching shares of NetEase as we approach the Hong Kong Open today. Fourth quarter gaming revenue missing Wall Street estimates. Its ADR's down 4%.
And we'll hear from the crypto industry's largest exchange. Binance CEO Richard Teng joins us to discuss the outlook for the sector and a new partnership with one of the world's largest asset managers. Well, happy Thursday.
Yes, a day to Friday the 13th. So it's time to get those lucky trades in.
Well, I guess there have been some elements of surprise, you could say, because that was definitely the U.S. labor market report overnight, for instance. Lots more jobs being added than what was expected, because it was 130,000, the figure, and well ahead of estimates. Of course, then you've got that expectation. What does it mean for the Fed? And further easing bets just get taken off the table.
Yeah, but double the median, I think, was what the jobs print came out. So we're looking at the rate-sensitive sectors, obviously a degree below your usual repricing out of the Fed. And I think as it pertains to markets here, so it's like things like gold, for example, are feeling somewhat of pressure. I'm looking at Hong Kong property stocks as, I guess, another cohort to watch because that specific group of names have been hitting highs after highs, day after day. Hong Kong financials is part and parcel to that. And obviously because we simply import monetary policy from the U.S., lesser rate hikes means perhaps more pressure on that. Apart from that, there's also this emergence of this AI scare trade, and it's gone from sort of industry group to industry group, and the latest one was biotech and some of the property services.
Yeah, property. I think it's sort of it kind of feels a little bit indiscriminate, actually, but really just trying to understand which business models, which sectors are most at risk from this. But yeah, we've gone from software, private credit, insurers, brokers. Start of the week was wealth management. Overnight, property and biotech are the latest here.
Yeah, we'll watch that very, very closely. In fact, in the next hour, JPMorgan will be joining us, asset management, and of course one of their strategists that looks specifically and has some expertise, of course, in the AI space. Stay the course is what they're saying. Will there be a nuance to that? Stay tuned for that interview coming up. As we approach the open today, have a look at where we are. A50 futures should be punching higher last we checked. The tailwinds are coming through across equity markets, a lot of that in the form of South Korea, which we'll show you in a moment here. S&P futures slightly to the upside, modest upside we're seeing across markets like Japan. Keep in mind, Taiwan is closed today, and that goes into next week as well. So just keep that in mind as it pertains to, I guess, a function of volumes and sort of the AI proxies in the region here. Speaking of Korea, the Kospi benchmark is hitting fresh highs today. And what else is new with the two? We're calling this the Kospi 2, right? Samsung Electronics and SK Hynix pushing to the upside 3 to 4%. The macro picture looking like this, and of course within the sort of cross-asset space, we're looking specifically at nickel, given the news out of Indonesia and perhaps less supply coming to the market. The quote is there. More on that in a moment. Dollar is softer for, I think, a fourth or even fifth straight day. Two-year yield, obviously pressure coming through there. We're coming off a little bit after this sort of repricing to the upside on yields there, 3.5%. A50, before A50 futures, we're looking at the Golden Dragon Index, KWEB. NetEase, we talked about that stock to watch today. Hesai giving up some of the gains we had midweek. And yes, the Shanghai nickel contract coming up very shortly, and the 10-year yield did take out the 1.8% handle. I think we've seen 5 days of declines across the 10-year yield. Could be 6. We'll see what happens today. Dollar China inching ever closer to that 690 handle.
Yep. Let's bring in our executive editor for Asia Markets, Paul Dobson, for more on this. So, Paul, even though we've got, as I said, further bets of Fed easing sort of being reduced somewhat, we do see equities that are moving higher in the region today. So it seems like the report overall is being treated as good news.
Yeah, morning, Annabelle. I mean, I think you want to separate a little bit the Asian narrative from the US narrative right now. Yes, the jobs data do show that the US economy is relatively strong. It's also seeing people pushing back those bets on when the Fed will next cut interest rates. But look, Asia has its own story at the moment. The MSCI Asia Pacific Index is outperforming the S&P 500 index by about 10 percentage points this year. That's the most for the start of the year. This century. You know, it's boom times in Asia. You talked about it with the Kospi index just marching higher every day with a Y in it. It seems to go up at the moment. It has those tailwinds. You know, people are worried about the impact of AI, but the people that are making the stuff that powers the AI are here. And those companies are doing extremely well. And there's a lot of enthusiasm about how the rest of the market is tapping into that and how that's going to fuel not only positive economic effects, but also a wealth effect across the region. So there's still that momentum that's driving the Asia-Pacific region equities higher, well ahead of the US with the extra tailwind of stronger currencies relative to the dollar and also against Europe.
And Paul, how about the AI scare trade specifically? And do we have to look at that through a different lens in the Asia Pacific? At least the last couple of days or so has certainly told us almost as much.
A little bit. I mean, there's fewer companies that grab the headlines here that are of the same nature as those in the US. You know, the big global firms that are very labor intensive and charge high fees for it. We did see impact, of course, in the India services sector, for example. So there are pockets and companies where people are going to be looking at whether AI is going to be doing the job for them at some point. I mean, everybody should be paying attention to that, right? Okay, the latest iteration of the AI models just seems so powerful, and so the progress is so rapid at the moment that there's definitely going to be an existential threat to some businesses over the next 5 or 10 years. You know, maybe not today, but you do want to think now about how are they reacting? What are they doing about it? How are they being more efficient and using it? Or is it going to be able to kind of eat their lunch over time? So, you know, I think that for our region, as I was saying, we have more of the sort of start of the supply chain, if you will, for AI. But yeah, I mean, it always pays to be cognizant about where those risks may emerge next and who's under scrutiny from the power of AI.
Paul, thank you so much. Paul Dobson there in Singapore for us. Staying on theme here, Chinese AI developer, certainly one stock we'll be tracking. Today, Zhipu is releasing this upgrade to its flagship model. That's, I think it's today, of course, when it comes out and becomes public here, accelerating this race here to preempt an expected new product from DeepSeek. Let's bring in our China correspondent, Min Min Lo, who's been watching the latest iterations of the technology coming through these next couple of days or so.
Yeah, so the race is heating up because Zhipu is just one of those following on after DeepSeek, after ByteDance and Moonshot. They are all sort of releasing their upgrades to their flagship models ahead of Lunar New Year, and everybody is anticipating DeepSeek's new model that is expected sometime after Lunar New Year, around the same time as they released it last year. And this is a model that has doubled the parameters of the previous model, and the greater number of parameters you have, the more sophisticated and nuanced the understanding of the AI tool and its generative capability. So Zhipu has now said that it's going to charge 30% higher price for its latest model. And if you look at the company, which just debuted in Hong Kong just about a month ago, its stock price has surged tremendously and actually doing much better than the traditional large tech companies, including Alibaba, Tencent. The company has said that it's benchmarked its product against Anthropic, and we know Anthropic has already led to this software sell-off in the US. And the company's CTO said that DeepSeek had been a wake-up call for them, and they are going to go back to their roots of focusing on fundamental research.
So that's the AI story, and we can track, of course, that AI at the open, but NetEase is another company we're going to be watching just off the back of earnings. So what stood out to you in the numbers?
Yeah, again, it didn't do very well, and that AI theme, again, proving to be a disruptor in the gaming sector as well, because this is a company whose revenue grew by about 3% in the fourth quarter. That's much less than what it had earned in the first, second, and third quarter of last year. You look at net income, it declined by 30%. 30%, close to 30%. And you look at what's being shown on the screen, every single metric there had missed analyst estimates. But still, some analysts are pretty confident in the long-term prospect of this stock. You have JPMorgan saying buy on the dip because they believe that the fundamentals of this company is still intact, and some of the headline miss is because of the below-the-line sort of metrics that are coming through. And you look at Jefferies as well, saying that AI could be beneficial to this company because NetEase has been one of those that has been actively incorporating AI throughout all of its workflow. So it could be beneficial for them rather than a threat. And Citi as well, saying that this doesn't really change their outlook on the longevity of their gaming portfolio.
Min Min, thanks so much for joining us. That was our China correspondent, Min Min Lo, there, and just taking us on that earnings theme into the agenda for the session today, because there are some big companies that are coming out with their figures. We've got Huawei, that's going to be an interesting one to track.
Yeah.
After we had SMIC, of course, we saw some weakness in that stock. Lenovo, another one. Are they still, I mean, we spoke to them at the end of the last year with their earnings period, and they were saying that they were going to be able to stave off that memory chip crunch. Are they still able to do that? Some of the sectors in focus, they've already mentioned, but utilities, Hong Kong property, nickel, we're continuing to track that CGB rally. You were saying for a fifth straight session, we've seen yields moving higher. Do we get to a sixth? And then as well, those PBOC liquidity injections. That happens in just a few minutes from now.
Yeah, we'll see, because it was double the amount from the previous day that we had on Wednesday, plus, of course, the fix as we approach the 690 handle. And, of course, on the injections, it's seasonal as we approach the long holiday that's coming up, of course, in mainland China. And just a note as well there on the utility stocks, because we do have some guidelines coming through here as it pertains to anti-monopoly. I'll correct myself if I'm wrong. I'm just trying to find the actual story for that as well. But yes, lots of sectors to watch going into the open today. Now, speaking of nickel here, we'll focus in on what's been taking place. Indonesia signaling a sharp cut to output this year in a bid to boost prices. So everything from miners to battery material stocks going to be very much all its proxies in the region. Counting down to the open of trade, Shanghai, Shenzhen, and here in Hong Kong. This is the China Show.
The Republican-led U.S. House has passed legislation aimed at ending President Trump's tariffs on Canada. The move signals growing anxiety over the White House economic agenda ahead of midterm elections. Let's bring in our Washington Deputy Bureau Chief, Laura Davison, joining us this morning. So, yeah, Trump has threatened to veto similar measures in the past, so it's sort of unclear whether this is actually ever going to become law. But it certainly does, as we said, show that growing anxiety, essentially. What does it mean for tariffs?
It means that the vibes are very bad, at least politically. Republicans are going into an election year. They have to face voters really as soon as just a couple months from now for some of these primary races, and then again in November. And as cost of living, affordability issues are at the top of voters' agenda, tariffs are one of the things that are getting the blame for some of those higher prices. So while this legislation will likely never become law, it's not going to necessarily repeal these tariffs. It shows a growing rift within the Republican Party about how willing they are to stand behind Trump and these policies. And you have a lot of them, or at least 6, who so far have come out and said, nope, we need to chart our own path, which really could signal a different path for the Republican Party going forward, post-Trump, post-tariff.
Just broadly on USMCA, what does this we understand around the president privately considering getting out of that?
Yeah, so the president has publicly mused, about this renegotiation deadline, which will hit this summer. Right. But privately, he's taken a little bit more of a strident view here, kind of peppering his aides with questions on should the U.S. go ahead and pull out of this entirely. Right. That would be highly unexpected. This deadline is not really this is usually sort of a pro forma deadline. They, extend this deal. It's set to go for several more years. This would, really upend trade negotiations and trade relations within North America if you just completely pull the rules of the road off. It's not quite as extreme as something like Brexit, but it's akin to that. If you would, where there's so much cross-border trade happening here that it would really, be a huge shock to the economy of the entire continent.
So then, what is the most likely path forward, do you think, given you do have reviews that are scheduled for this year?
What we know from Trump is he likes to take these maximalist positions at the beginning of a negotiation, and he'll kind of throw out the biggest, sort of most shock-worthy thing to the markets, and then scales back from there. This is kind of your classic taco trade. trade happening here. So we can anticipate that this may be something he announces, but may not necessarily be exactly what he said on doing. He's using this as leverage to get something from Sheinbaum and Carney in these negotiations.
Laura, thank you. Fantastic. Very nice wrap there. The big news on that front. Laura Davison, there, our Washington deputy bureau chief here, writes, we're just looking at the renminbi fixer today. It's out now 694.57. The estimates for just doing some rough math here, the estimates are for something like 200 or so pips south of the level. And as you can see, we're looking at a bounce on dollar China as we are coming close, but clearly not as close now to the 690 handle. I'm also just waiting for any indication of how big, if any, the liquidity injection is going to be. No information on that so far, given, of course, the relative drop we're seeing in repo rates onshore. Okay. From the rates market, we're looking at commodities now, and of course the big move overnight into perhaps still today. There we go, nickel futures. That's the Shanghai, that's the China contract on your screens at the bottom. London's at the top, 2.4%. Sources have told Bloomberg, and here's a story, Indonesia, of course, massive swing producer, wants a sharp cut to output this year, curbing supply from the world's biggest mine in a bid to support prices, nickel prices. Exactly. Let's bring in Andrew James, our energy and commodities editor, with us from Singapore. Andrew, talk us through this. The rationale seems straightforward in terms of putting a floor underneath prices. Specifically, how is Indonesia looking to do that, though?
Hi, David. So we're talking about the Weda Bay nickel mine that's in Halmahera in eastern Indonesia, and it's the world's biggest mine. So the government has told them that their quota for this year will be only 12 million tonnes, and that's down from about 42 million tonnes last year. So that's a massive drop. Eramet, a French company which is part owner, has sort of subsequently confirmed those numbers. The company's also part owned by Tsingshan Holdings from China and a local company, Aneka Tambang. So prices started rallying mid-December when we first started getting reports that Indonesia would be looking to sharply sort of lower nickel production this year. They're up about a quarter since then. Indonesia now accounts for around 2/3 of global nickel production, and ironically, nickel prices have been trending down over the last 3 or 4 years, and the increased production out of Indonesia has been one of the main reasons for that, as well as slightly disappointing sort of demand from the EV industry and a bit of a move away from nickel chemistries to non-nickel chemistries and batteries.
So what is then the supply-demand dynamic going to look like if you have actually seen Indonesia not necessarily flooding the market, but certainly it seems like excess supply? Is this just bringing it back into balance, do you think?
I think that's the goal. Overall, they are looking at total nickel production for this year of about 260 to 270 million tonnes. That would be a drop of about 70% from last year's target. Analysts sort of say that level should be enough to support prices going forward. As I mentioned, we're already up about a quarter since mid-December, although some of that's also due to the fact that nickel was caught up in these sort of speculative buying of metals last month, which sort of pushed up prices. But as part of the quota system, they get reviewed at the half year and they can be changed then. So I think Indonesian authorities are obviously looking for a sizable jump in prices, and depending on what happens, we could then see an adjustment at the mid-year.
Andrew, great to have you with us this morning. That was Andrew James there in Singapore. Let's take a look at how futures are setting up, because we're just less than 10 minutes away now from the open in Hong Kong and also mainland China, and looking for a slight bit of weakness, maybe some mixed moves at the open here, continuing to track that Chinese yield there. And we also got that Yuan reference rate you can see at the bottom of your screen there. So 694.57, again, another day ahead of the estimate. But taking a look as well at some of the movers, because we've got a big focus on the tech space in particular. AI has been just another another big theme overnight on Wall Street, but this is for a different reason. ZAI, or also commonly known as Zhipu, one of the leading Chinese AI developers, so they're going to be releasing a new update to their GLM model. This is going to be the 5th iteration, designed to tackle complex coding agentic tasks, and they say essentially it goes head to head with the foundation model from Anthropic. So you are seeing that stock there moving quite significantly to the upside, but we'll have more ahead. This is Bloomberg.
Good morning. Welcome back to the show. About just over 5 minutes to the opening bell, and as you can see, we are gliding into the Thursday opening bell with a pinch of weakness going into today. We are, of course, coming off 2 or 3 days of gains, depending on which benchmark you're looking at there. 0.5% to the downside. We're looking specifically more on this, of course, in a moment here. The AI plays with Zhipu, the latest one, up 9% in the pre-market. Just to also mention, seasonally, the PBOC coming in with a bigger injection today, bigger than already the big one that we had on Wednesday, which was double the previous day. So we're looking at, I think, nearly 450B. There we go. Anyway, on the specific stocks, what we talked about is 9% to the upside. It goes live today, and okay, this really comes ahead of what is widely speculated, not confirmed, I believe. DeepSeek will be releasing their own version. It's speculated in the market towards during the holidays, of course, in the next couple of days or so. Anyway, want to watch, I guess, if it does come to fruition.
Yes, certainly. I mean, it would be timely, and you're certainly getting a lot of eyeballs over that break as well.
Yeah.
China Property Services, another one to track. You're looking at the property sector for I guess, more localized reasons. We have seen a big run-up, but also just overnight to say, okay, this really doesn't put the wind in our sails. But essentially...
this is the AI scare trade. The property services ones, yes. So
go ahead.
Yeah. So this was well, I guess it's the perfect example of how maybe the AI scare trade is more a U.S. story. You don't have a pronounced names, but in any case, that I guarantee that will be the last time you look at this board today, from an editorial standpoint. All right, CATL up 2%. Tech bond issued at. Let's check us rate 1.69. That's a coupon. There we go. NetEase. Earnings story, Manulife and Budweiser APAC out with earnings earlier on. NetEase was yesterday, and we're down about 2% on that. There's really a stitching together, this sort of alcohol embargo that's taking place. Budweiser, Asahi, and Heineken yesterday. We'll talk more about that story in a moment. The opening bell, just ahead. This is the China Show. Welcome back. You're watching the China Show, counting down to the open of your cash markets in the Greater China. As you can see, we've been range bound for the last not a few days. Of course, we're coming off gains, but the outside of South Korea and obviously Taiwan being closed, there's really not a lot of action across these markets today. Of course, the big news overnight was that solid jobs report, double the median. We're getting pricing back as far as the rate cuts are concerned. So I think we're pushing that back by about a month. Weaker dollar, weaker gold. We're looking at Hong Kong property as a proxy, of course, of U.S. rates. Apart from that, obviously AI and tech is going to be, and earnings too, going to be focusing very much in focus today there.
Yeah, we've got some key earnings coming up. We've got Huawei, we've got Lenovo. They're probably the two standouts for the session today, but it has been sort of a bit of a mixed picture so far. Let's take a look, though, at the market open, because we are just seeing some very modest upside at the beginning here of trade. Some of the names we're going to be watching in particular, the CATL, of course. We've just got their technology bond, or their first tranche of that being issued. The coupon on that is 1.69%, according to a filing to the Shenzhen Stock Exchange. Otherwise, we're seeing really the kind of a little bit range bound so far in the session, continuing to track yields, of course, because we've just breached that 1.8% level on the 10-year. And as Dave was saying, rising for 5 straight sessions so far. Does it become 6 for today? Let's take a look as well at what's happening in Hong Kong today, because we do have a couple of different stocks we're tracking closely. Firstly, ZAI or Zhipu, you can see there at the bottom of the screen. So this stock is jumping. We are going to get an update essentially to its foundation model. This is the GLM, the 5th iteration coming out. They're saying it's very comparable to what you see from Anthropic with their Claude Opus series, just looking at similar performance, similar capabilities as well. But this one is very much focused on complex coding, agentic tasks. Otherwise, it's a fair bit of red across the screen. It's something in common actually with Alibaba, Baidu, Meituan. All of these stocks, according to CCTV, or all of these companies rather, have actually been summoned by officials in Beijing. They're looking at train ticket sales. So just an interesting one to track, given we're, of course, approaching the Lunar New Year holiday, and it is the biggest travel period of the year in mainland China. Let's take a look at some of the movers in the metal space. We're watching nickel this morning. This is an interesting one, of course, to track, just given what we got from Indonesia. And essentially, they're looking to restrict nickel output quite considerably. Is that really, I mean, we were just talking with Andrew James there from our reporting team, but essentially saying you're bringing that supply back into balance a little bit, it seems, because Indonesia makes up around 2/3 of global supply. We're just seeing some of these mining stocks just moving a little bit higher so far. And that earnings one to track, as we said. At NetEase, we already got those numbers out overnight. Not good numbers. We saw a slip in ADRs. Game sales, the big focus for us. And Budweiser as well. You're watching that one, Dave, the story on that one.
Yeah, it was a decline across most financial metrics. And I think the key here is, well, number one, obviously the stock's reacting as you would expect. It's consistent with what we've heard from peers in the industry, right? And obviously we haven't gone through the fine print, but Asahi's come out and said, I think beer sales are down. Let me just get that up, just so I have that's accurate for me. Heineken yesterday in the European session came out, and it was quite a big number as far as some of the job cuts are concerned. I'm just looking at Asahi. Just give me a second here. But it just goes to show, right? This shifting trend of less alcohol consumption per capita is really, here we go. Japan beer sales fell 11% according to Asahi in January. So I think this is something to keep an eye on, certainly as we go into Valentine's weekend. There we go.
Which you're looking forward to.
No, I am not. They are. I'm about to get swindled for the same exact liver pate. They're just going to put it on a bigger plate to make it fancier. But yes, we can talk about the phenomenon of Valentine's inflation a bit later on. Speaking of inflation, markets re-rated, of course, in mainland China last year, right? The markets, depending on, I think, the benchmark, 20 to 40%. It was a really good environment for passive and active investing. Quant funds and quant strategies did quite well. In fact, Lingjun Investment was China's best performing quant fund last year among firms managing over 10 billion renminbi, a return of more than 70%. That's 70. Let's get more on their strategy and bring in their senior portfolio manager here on set with us. Siyun Zhan is here on set. Good morning. Very nice to see you.
Thank you for having me.
70%. Good year.
Yes, for sure.
Are you surprised?
It has been a really great year for quant funds in China, both from the alpha generation side and also the beta. For those that doesn't know, right, China, a lot of the strategy are long only, benchmark neutral. So we also will benefit from the beta. And the supportive government policy, which increased the market liquidity, market participation, and overall market breadth, those has all been very good for us. And we expect this trend to persist.
And so far, from the start of the year, how have things been in terms of you guys and just the beta trade?
Yeah, so beta has been really strong. Everything's been growing, and there's been a lot of thematic rotations. So this type of environment, obviously, because last year we did extremely well, the whole industry did really well. So there are some expected sort of reversions, but it's all within our model expectations. And we can say that the alpha is still really strong, and it has been recovering, especially in February, in the recent past few weeks. And I think we still can produce extremely good returns for the investors going forward in this year.
Okay, and sort of the top strategies that you're employing right now, like what are the big, in terms of price movement and momentum or key factors, what stands out to you so far?
So for quant strategy, we're kind of different from the discretionary. I say we're really diversified. Our exposure is extremely diversified. We have tens of thousands of different hypotheses that we're trading. On the risk control side, we do a lot of like sector hedging, long-short stock pairing, and basic risk control to manage our exposures. And all of this makes us so that we don't really put our eggs into one basket. So we have stuff that's from fundamentals, from technical signals, from opinions, from sentiments, from, for example, alternative data and AI models.
Okay.
So those are a big part of our strategies.
Just to go back to those hypotheticals, because you're saying you're trading or positioning for a lot of different scenarios. From one end of the spectrum to the other, what are you sort of factoring for, and then what's the most extreme to the other, I guess?
So yeah, we trade. So the way that we do is that we really manage our risk extremely well. The name of the game in the quant industry is really about diversification. So we kind of look at the market dynamics. There are different products, as you said, like the benchmark relative product is extremely popular in China, mainly due to the market structure and also demand from investors. The large cap will be much more defensive, and the small caps will be much more aggressive in the maximizing return. And we have people that basically any spectrum of the demand cycle. And we really tailor our products to suit the specific investor. So basically the large caps, you might be more fundamental driven, so that when the market is not doing well, you can have that defensive positioning. While on the maybe small caps, we can give them the maximized return that they want, but you would expect to have more turbulence along the way.
And what if you do make assumptions? Of course, I just have to caveat. If you do make assumptions, what is the assumption you're making around large and small cap performance? Because to your point, at large caps, you sort of pay your bills.
Yeah.
Small caps give you the bonus, right? And small caps have been outperforming recently. So how has that changed? And what do you think is going to happen there?
Yeah. So the beta part is actually it's extremely good. Has been extremely good in the past. But for us, what we're focusing on is not delivery just beta for the investors, but real alpha generation, and that can be done throughout, all the benchmarks, not just the large and small. There is definitely more liquidity and in the large caps, and more information, I guess, efficiency. So you would expect that there's the trade-off between information efficiency and liquidity and return. And on the small cap, there is less information efficiency, I would say, and we like volatility, and small cap has more volatility, so that will also give us more maximizing return. But the alpha generation across will be always is pretty good. Like last year for even the large cap products such as Husen Sanbai and A500, which is synonymous to the S&P 500, we will be able to create even like 15 to 20% excess return, and on a small cap, we'll be able to deliver 30 to 40%.
You mentioned here, quant investing is shifting from traditionally what people know as speed and scale to high quality development. Like, what do you mean by that? How does that tangibly show up in your role?
So relative to the Western counterparts, we will say that the quant industry in China is relatively nascent. So in the beginning, you obviously will be speed to market, and also getting that scale to economy. But that's and also with the cold Chinese economy, we're starting to shift towards that quality over quantity. And this also has to do with the investor preference. The investors are getting more sophisticated, getting more global, like international. So what they want is basically long-term stable return rather than just maximize return sort of product. And also with the proliferation of AI models and all these advanced risk control and risk management concepts, it also makes it so that quality becomes much more important in this much more fierce competitive market where there's a lot more just firms and a lot more assets that's coming in.
Speaking of assets coming in, it's done. You guys have done very well. Have you seen a lot of inflows into not just your fund, but across your peer group?
Yeah, so the quant industry in China is really getting a lot more recognition. So that has two sides. It attracts a lot of good talents, which helps with the speedy development of the industry. And on the side, the network competition is also growing a lot. I think in 2024, the number of 10 billion plus RMB shops is in the maybe 30s. Okay. And now it will be well over 50. And I think the assets grow to over $1 trillion by probably more like 50% in the past two years. And that creates a lot of capacity constraints and how to monetize this capacity. We need like new, novel, innovative thinking, and managing our market impact, managing our scale, manage how we monetize new signals, as well as how to scale up our existing signals. So it also poses a lot of challenges.
And in terms of just, I guess, improving the capacity and I guess finding the edge, if you want to frame it that way. We talked about this during the break. How are you guys using AI, for example, in terms of just enhancing machine learning and your models and your algorithms?
Yeah. So we invest a lot, like I think all the funds in the industry does, in talent and also in infrastructure, whether it's the hardware, software, or trading or other platforms. AI, I think we're actively investing and research in it, and we truly believe that it's going to become a very integral part of the quant strategy. And this is how the market also perceives us. Like a lot of the investors perceive the quant industry to be in a really good place to benefit from the proliferation of AI models. So we see that the AI model will be moving more from the current synthesizing of data to more as a really core architect of our strategy going forward.
Do you get concerned at all when you see the sell-off in wealth management stocks, for instance, though? Because it has been one of the big questions we've had, just the power for AI to disrupt business models. Yes, you can integrate it further. Are you ever worried about sort of displacement, though, as well?
I would say that for us, we're really about diversification. So we don't put our eggs into one basket. What we look at is basically the short term. They might create some turbulence in the market, such as turbulence in disruption in the cross-asset correlation, in volatility surges, liquidity crisis, or maybe abrupt changes in capital rebalancing. But those are all well managed by our risk models, and those are expected. And in the medium term, we will expect our model to adapt and everything to be behavior as normal. And if I say the very long term, right, like to us, it's never about not encountering any storms, but it's really about having the solid foundation, the diversification, the risk controls, and just the overall firm preparedness to basically weather through these storms.
Final question for you: the basic or the ongoing debate right now among the international investment community when they look at the Chinese market, rather simplistically, in my opinion, but how does the market do in your view? What's your market outlook this year? So whether that's a call in beta onshore, and how does that sort of juxtapose that with still the very weak macro environment as far as the economy is concerned?
Right. So first of all, I think the government support, the encouraging government policy in China we believe that it will persist. Is the trend. And second of all, the macro policy stuff, I think that's one of the good things about the Chinese market. And this is I think a lot of international investors came to realize, is that first of all, Chinese market kind of have very low correlation with the rest of the developing economy. And on top of that, like quant funds actually have a low correlation with more of the traditional strategies as well. So in some sense, the Chinese economy is more insulated, protected from these kind of macro headwinds. And second of all, on the quant side, because like I've been emphasizing the diversification and our hundreds and thousands of signals and the risk control and portfolio construction, that further insulates us from this kind of macro sort of exposure, the broader market beta exposure.
Siyun, great to have you with us this morning. Yeah, please join us again. That was Zhan, there, Senior Portfolio Manager at Lingjun Investment. And coming up, we'll have more on markets with JPMorgan Asset Management, who think investors might be losing patience as they wait for US hyperscalers to justify their big spending plans. More ahead. This is Bloomberg. You're watching The China Show. Taking a look at WeRide here. It's actually under pressure this morning. There is some reporting from Dow Jones around the company's plans, but they're looking at slashing costs, aiming to double as well their robo-taxi fleet, scaling to 3,000 by the end of the year. So we are keeping a very close watch really on WeRide, Pony AI, also Baidu as well, just given these are the Chinese ride-hailing or robo-taxi giants in mainland China, and the threat as well that could be posed from Waymo, because we've spoken with the co-CEO of Alphabet's Waymo that says the autonomous driving unit will top 1 million paid weekly robotaxi rides by the end of this year. Takedra Makawana told us his funding round this month that valued the business at $126 billion is a vote of confidence.
We are just laser focused on execution, building Waymo to be financially responsible, operationally excellent, and then make sure we maintain the safety culture. Like, that's what we're really focused on. Having this vote of confidence, as you said, not only from Alphabet, but from our 3 co-leads from this round and from all of the new investors who decided to join our cap table and the existing ones who doubled down on their belief that this is the right opportunity to fund. And so we just feel humbled. But also, there's a lot to do. So we're just really focused on making sure that we can scale, focusing on our 2 first international launches, London and Tokyo, and scaling across the United States.
We do not yet have, although there has been progress toward just this week, a federal level framework, set of rules. What do you think the direction of travel is with that? And clearly, if you had to deal with one set of rules and not a city by city, let alone state by state basis or case, you'd be making a bit more progress, I suppose.
Yeah, we think it's really important that there is a federal AV standard. We've been advocating for sort of a safety case-based approach because the technologies are different, and we think that the burden should be on companies to demonstrate why you believe your technology is safe enough. We also think there should be transparency requirements. People should have to demonstrate how many trips are you providing. Right now, the balance isn't quite there. I mean, some states require a lot of reporting. Some don't require as much reporting. I think the United States has an opportunity with this technology to lead globally. And I don't think you can lead globally if it's a framework that's governed by multiple jurisdictions across the states. And it's a way to slow down the adoption of this technology, not only in the U.S., but in other markets.
New York City, not necessarily New York State. A lot of people want to know what's the roadblock there, pardon the expression, and what's the timeline. You work closely with the authorities, but that is a big potential market.
Yeah, that's a market where, we're just going to have to do the work and demonstrate our safety outcomes and earn the trust and chisel away at it over time.
Do they have the rules for you to follow?
They do not have rules that allow the human operator to be removed from the vehicle entirely.
And until that changes?
But, there is an interest in doing this in the state, even outside of the city. And that gives us an opportunity to grow more fans. And fans actually are calling for this in cities where our technology can't be deployed. We are seeing organic campaigns spring up saying, I want Waymo in my town.
San Francisco, the Bay Area, is my home. London's where I grew up. And I was studying the map of the boroughs that you propose to launch in. And you correct me if my math is wrong, but just based on those boroughs, at launch, this seems to be the biggest citywide deployment from the start that you guys will have done. Is that correct?
It's correct. I mean, we're in the phases of figuring out the specifics around the launch and figuring out the actual framework around the launch. And so I don't want to speak too definitively about what we're going to do. But what you're speaking to is we're not gated by the technology.
Right.
And we have the appetite to scale. And we want to partner and do so safely. And we want to earn trust. So that's there's a lot of levers there that we have to figure out how to strike the right balance and how to make sure that we're introducing it to the community, both to meet the demand and to grow the trust.
I asked because of those 20 cities to come, London is one.
Yes.
And London is now outside of the European Union, but it's kind of your Europe launch.
Yes.
What was that experience like within London's regulatory framework and the UK's regulatory framework?
They've been extremely forward-leaning and interested in seeing how this technology could actually improve safety on their roadways.
Right.
And that's where I think, we find a sweet spot when people are less sort of complacent about the status quo.
There we go. That was, of course, our co-anchor, Ed Ludlow out of Bloomberg Tech, with the co-CEO of Waymo there. Of course, discussions around the business and the trends, regulatory environment, and everything in between. Right, we have another big interview coming up here on within the tech space / intersection with the crypto markets. Binance, the co-CEO, Richard Teng, will be joining us in a couple of minutes at those times on the screen. So call it 40 or so minutes from now. Their outlook for the sector amidst the latest bouts of vol in the market. Plenty more ahead. This is Bloomberg. We're about just going on 25 minutes into the cash market session, and give it a minute or two here. CATL, A, and H shares to the upside. So number one is you have, of course, this local currency or Yuan tech bond being priced at a coupon on your screens. The other is related to the next board that's coming up, and certainly related to, if nickel prices are on the way up, what does it mean for downstream battery producers and sort of that connection between the two? Certainly, from an upstream perspective, a lot of the nickel producers are really feeling the tailwinds coming through out of the big news out of Indonesia, looking to curb supply and put some further support across the markets, nickel prices specifically. And of course, Indonesia opens up in the next hour. We'll keep an eye on that specific space. Chinese tech on your screens very shortly. Apart from this, there's also an earnings overlay here with Lenovo, and we'll talk more about that. But pressure coming through across some of your big tech plays there, from Baba all the way down to Baidu, in the order of about 2 to 3%. Right, we have plenty more on the way here in the next hour of the China Show.
Welcome back to the China Show. Taking a look at how the Hang Seng's faring half an hour into the session. We're a little bit under pressure this morning. We did see a bit of a sell-off overnight, of course, in these property-linked stocks and concerns around AI disruption, essentially. We've hit across a lot of different sectors, all the way from software names, wealth management, insurance, now into real estate, but that broad-based concern around what is the disruption actually going to look like. So that's one sector we're watching, or one factor we're watching. But also I think it's interesting what Paul Dobson was telling us in the top of the last hour, which is you don't necessarily need to think about the narrative of what's happening in the US markets directly translating to Asia, just given the outperformance of this region so far year to date.
Yeah, the picks and shovels is offsetting the AI scare trade, at least for now, right? And I think you look at a market like Korea, and we'll show you that in a moment, which has really just gone from strength to strength. And, it's probably one of those times where it's probably good to ditch the technicals chart, because it doesn't seem to be giving you proper signals. I mean, it's been overbought for, as far as I can remember, really, the Korean markets, right? But yes, more on that in a moment. U.S. futures, as you can see, Nick, you know what? These markets are boring today. Flip the page. Let's talk about something more exciting. And you know what scares me when you look at this? We talked about this earlier on. I'm going to go on this rant. I'm about to get swindled. It's Valentine's weekend, right? So florists are out there. They're probably going to swindle you out of the same breed of flowers and charge you double for it. These restaurants are going to put together the same menu of the same items. They'll call it something different. They'll put some music in, and they'll charge you triple for it.
Can I just say, the fact that you just said breed of flowers tells me you're not quite ready for Saturday.
No. And you know what? Here I am ranting about it, and I'm going to scramble and be a victim to these things. And the other thing too is so apart from obviously the monetary hit I'm about to take, and many people, we had this conversation before. I really don't like dentists.
Yep.
Right?
Yep.
And I'm seeing my dentist later today. Oh. And I bet you they are going to pitch another attempt at my wisdom teeth. Why are they always after your wisdom teeth anyway? And they're going to charge you an arm and a leg for it.
Yeah, I mean, if they've got to come out, they've got to come out. But
But they don't.
Okay.
Anyway, so I'm taking us
Indonesian nickel stocks, because I think we can also. Do you want to talk about that?
Yeah, why not? Yeah, it gives me a good distraction from really, let's call it the next 72 hours of purgatory. Okay, there we go. Well, let's start with the Aussie financials, Sue, right? So the central bank governor is opening the door to the possibility of further rate hikes if this inflation does remain in the sticky plays. And you get this, and you get the miners doing about the same in Oz. You get an index that is really doing better today than usually the case. Speaking of miners, Indonesia nickel. You set that up for me, but I'm sending it back to you.
Yes, no, thank you. Thanks. So Indonesia essentially is going to be looking at, or they've got plans to restrict output essentially for this year on nickel. They have become by far the world's biggest supplier of nickel into the market. They've really faced some supply glut fears, I guess, in recent years. So just trying to bring that supply-demand balance back into the equation. And you're seeing here today lifting some of these sectors higher, stocks higher.
Okay, redhead just crossing the Bloomberg terminal. This is the 40-year JGB yield. We're down 10 basis points. We're down to 3.625%. We're looking at that, of course, going into the last 27 minutes of the cash market session there over in Japan. What is the yield doing right now? And it just also reminds me to remind you guys to keep watching the CGB market, because that's obviously
I thought you were going to say that. We were higher at the open.
Yeah, right.
On yields.
Okay, we're now 363. Okay, on that. Okay, more on the Korea rally, right? So we've crunched some of the numbers, right? So we're calling this the Kospi 2 against everything else. And when you look at the points gains coming from Samsung and SK Hynix, it's about 51%. Of the nearly 3,000 points to the upside from 12 months ago on the Kospi itself. Everything else is down to all 834 other stocks in the Kospi index. So, I mean, concentration risk, this is, I guess, your poster child, given the AI rally. And memory, too, right? This is really a memory story.
This is a memory story because, of course, there's three big memory chip makers in the world. It's Samsung, SK Hynix, and Micron in the US. But let's get more on that.
Yeah, why not? The AI trade memory, agentic AI. Remember that? Okay, let's bring in Stephanie Aliaga here, global market strategist at JPMorgan Asset Management. Very nice to see you in the region.
Thank you so much for having me.
So we wake up in the Asia Pacific to the AI scare trade in the US. It doesn't quite show up here in the Asia Pacific. So how are you thinking about that and against the backdrop of like the winners?
I think some of the scares in the U.S. are also some of the good news in Asia, particularly when thinking about what infrastructure is really needed to harness agentic AI. I think what markets are really beginning to price in is this ChatGPT moment for AI agents. With the recent advancements in AI coding tools, we're realizing that we're going to get some pretty neat productivity benefits from these tools. But what I think markets have still to really figure out is the nuts and bolts needed for that. And when you think about these agentic systems, and I've been vibe coding myself lately. It's been a lot of fun. We're all soon going to be vibe coding. Okay. I avoided every Python class that they tried to throw at me.
This one,
for the record. But now I can create my own charts. I can create all my custom analyses. But I've noticed as I'm using these things, you really have to manage the memory of these agents, their context, because they get tired too, mentally tired, the longer you use them. And so these agents require memory is really the bottleneck here, not just the raw intelligence of the model, right, where GPUs were really the secret there. Now it's memory, and it's also the fact that they're calling different tools. They're calling different contexts. So we're seeing in a world of agentic AI, we're going to need a lot more of all of these different pieces of the chip ecosystem. Many of those companies with real bottlenecks, real moats in servicing that are in Asia, some in the US too. But I think the focus really has to be on there, and markets may be jumping ahead of themselves a little bit when thinking about who's going to be disrupted here. We need to figure out how do we even get there in terms of adoption.
So still in that sort of inference side of it, or infrastructure side, which is the inference chip right now, which is the deployment of this technology. The companies, though, that have the most advantage in this space, and I just said for Hynix, Samsung, Micron, how do you think they actually look to take advantage of that, and how do other companies look to take advantage of, I guess, that pricing power they're going to be having?
Significant pricing power here. And I think the reality is demand is so strong that they are able to scale up supply and still maintain that pricing power, which is a great advantage right now. But I think the question is, like, how quickly do you want to ramp up that supply? And really on the other side of it, where we've been thinking is perhaps a risk, is the fact that these chips are getting more expensive because of those moats that these companies have. So when I look at hyperscaler spending, which is now up 60% year over year, the four big hyperscalers spending $650 billion, how much of that is just inflation? because of how expensive memory prices have gotten. So I think there's going to be a challenge here of, okay, you have this pricing power, but you also want to enable the broader adoption of these chips and agentic tools. So there's going to be a balancing act there. And I think the reality is like one company's pricing margin is another company's cost of goods sold.
Yeah.
And we're seeing value begin to really shift across the value chain.
And is that the trade? Still go long, still stay long memory and sort of just be more cautious on the downside, like laptops, for example. And, Lenovo's coming up with earnings today. They've talked about this issue of memory, of course,
stockpiling
as their cost base.
Yeah. I think that's how markets are reacting in many ways. So you see this rotation away from the biggest spenders towards, again, the beneficiaries and also maybe some of the early winners on the adoption front, but it's still quite early there. But I think, again, it's that story of infrastructure. It's just infrastructure is broadening out. And it's not just chips. We've been talking a lot about energy, particularly in the U.S., the great need to power up all of these AI systems and the tax that's having on a grid that hasn't seen any growth in the last 20 years. So that's what we've been talking to clients about, the need to reduce some of that concentration from these biggest spenders and invest in the broader AI value chain.
Just one last point, though, on the hyperscaler side. I'm interested for your views then on Alphabet with the huge amount of debt issuance that we saw, because that was a concern coming out of earnings about maybe there not being enough investor appetite. But at least for Alphabet, that's been well and truly answered, I think, this week with that sort of issuance that we've seen.
In the debt markets.
In the debt markets. But yeah, your read across for equities then.
I think the reality is this AI infrastructure boom is only getting bigger. It's going to be pretty gargantuan. So far, it's been heavily financed by these companies' cash flows, which should not be dismissed. These are some of the most profitable companies that have ever existed. They're betting the house on AI. But they're diversifying their financing sources right now. Some of these companies are more creditworthy than the U.S. government. So do you want to blame them for tapping into debt markets when they can access pretty attractive financing means, particularly when they're building out data centers that they may use for 7-10 years? Do you want to pay for that with the cash that you just made this past quarter? So I think investors get a little spooked when they see debt. And it makes sense. All the bubbles that we've seen historically have burst because of an over-reliance on credit. But we are not over-reliant right now. The average net debt to EBITDA for these hyperscalers is 0.8 times, compared to the average U.S. investment-grade issuer, 2.6 times. So overall leverage levels are very low. We're tapping into bond markets. We're going to have to get used to this, just given how much spending is needed. But overall, we still look at a pretty healthy structure of all this AI financing.
Can I ask you about humanoid robots? And what does it have to do with the price of tea in China, as they say? So how does that go into the AI play? They're nice to look at.
Yeah.
Just from an investment thesis perspective, how does that show up, you think?
I haven't tried that yet here. I might need to try one of these robotic tea services. We have some of those coffee chains in the U.S.
Yeah.
When it comes to robotics, we're obviously seeing some really exciting advancements in the dexterity and the abilities of these robotics, and that they have generative AI to thank for that, as well as agentic AI.
Okay.
However, it's going to be far harder to scale robotic AI than it is to scale these agentic systems, these systems that rely on software. And so I think that there's a lot of enthusiasm. There are early opportunities there, but we're still quite early when it comes to the monetization of AI. And being early in the markets can be the same thing as being wrong. So right now, we think it's still a time to really focus on companies with real pricing power, real earnings growth. And when on the robotic front, we think focusing on infrastructure again is key there. The software system, some of the hardware, the chips that will be required here. There's a lot that we can kind of look at there. But when it comes to the actual manufacturing and bringing to market some of these things, we're still a bit early.
And is that mostly an Asia-centric investment universe?
Early, yeah, relative to the U.S. It's ahead.
Okay.
Yeah.
Yeah, I guess particularly on the hardware side. But in terms of, is it really the adoption, you think, or what's the biggest sort of bottleneck right now?
I think it's the materials, it's the hardware, it's the manufacturing prowess, and then you have Asian economies are much better than that than the U.S. So I think there's a bit of a differentiation there. But in the U.S., I think where we're going to see most of that focus, and perhaps here too, is on manufacturing and industrial capabilities. The consumer applications are really exciting, but we're still waiting for the cost of that to come down because the pricing power, I'm not sure, is there yet, as evidently.
Outside of AI, what other themes are we overlooking?
I think that's a great question. And right now, you've seen this rotation towards other value-oriented parts of the markets. Some of those lying in the AI beneficiaries theme, but beyond that, financials, healthcare. some sectors that have been perhaps underappreciated during all of this enthusiasm around AI, but that still have really good fundamentals behind it. I think we're really excited about the comeback of deal making that's benefiting parts of financials, particularly large cap, but also benefiting healthcare. A few weeks ago, we had our JPMorgan Healthcare Conference, and sentiment is looking a lot better. Of course, you want to be really careful about what you own in all of these sectors, but we think there's a lot of opportunity there. Also an opportunity to diversify across the market cap spectrum, particularly leaning into
down the market cap spectrum?
Yes.
Okay.
What about by geography as well? Last year we actually saw outperformance finally for global or world ex-US. What happens this year?
Absolutely. And look, I'm based in New York, and no one sports a home country bias quite like the U.S. investor. But last year's performance, I think, finally got the gears turning. And there is now a greater appreciation for the benefits of international diversification, the benefits of some dollar diversification, and the opportunities in this AI wave as it increasingly goes global, not just on the infrastructure side, but even like to hedge your competitive bets a little bit, right? There's a really vast and growing competitive frontier. These Chinese models are also getting better. So I think there's a greater appreciation for some of the opportunities overseas, and that's been resonating more with clients.
The risk of a stronger dollar, just to ask you as a final question, because the reminder of what a strong dollar can do and sort of the chaos it can cause across global markets I think it was 2 weeks ago when we had the Fed chair nominee strengthen the dollar and everything sort of just went down the drain. Is there anything on the horizon that you think could strengthen the U.S. dollar? That seems to be where most of the pain trade is sort of originates from.
There's a few things. I think markets are perhaps getting ahead of themselves and really cementing expectations for further rate cuts in the U.S. I think what the jobs report really just showed overnight was that the U.S. economy is in a pretty good spot. And it's going to be really hard, whoever the Fed chair is, to make a macroeconomic case for significant easing if the economy's humming along and inflation remains warm because of tariffs. So there is this real potential that the U.S. economy continues to grow. You have this productivity potential. You have inflation that just remains sticky in the near term. And then the Fed has to stay put for a bit. And that could also contribute to further dollar strength.
Stephanie, great to have you this morning. That was Stephanie Aliaga there, the global market strategist, or a global market strategist at JPMorgan Asset Management. And still to come, a big interview coming up with the Binance Co-CEO. We'll be getting Richard Teng's outlook for the sector after this year's crash. Huge drop we've seen, of course, you can see there in Bitcoin year to date. We'll have that, much more ahead. This is Bloomberg. You're watching the China Show this morning, taking a look at some of the movers. Look, it's right across the screen here, and it's all down to earnings. We had NetEase's fourth quarter game sales missing estimates, so that stock under pressure. It was under pressure in ADRs overnight, so just falling to similar magnitude of what we saw on Wall Street. Manulife as well, we had their fourth quarter total core earnings. It actually beat estimates, but still that stock fairly steady today in the session. And Budweiser, and Dave, you've been making that point that we're just seeing broadly a pullback in alcohol consumption, really, and that's weighed on not just Budweiser's but figures, but others as well.
It has. This one, and I think Asahi's come out and said 11% drop in Japan sales in January, specifically on beer. And I think Heineken was out with some job cuts, obviously, as a reflection overall, I think, of the reflection of the business moving forward. Now, just speaking of earnings, right? So we keep talking about this Korea rally that's been taking place, and I think when you look at earnings revisions, it's easy to just go to Korea immediately because this chart just shows you everything you need to know about the standout story in Korea as far as earnings upgrades are concerned. We showed you this chart yesterday, really, by a wide margin. Korea stands out against anything in the world. Arguably, though, the concentration here is also quite, so this could actually be down to just a handful of companies seeing their up. Speaking of the memory thing that we talked about.
Well, two really, Samsung and SK Hynix.
Yeah.
Essentially.
That's all you need, though, when you look at this coming through. Staying on the earnings story, SoftBank is a stock that we're tracking to today.
Yeah, we've got the third quarter earnings that are going to be coming out, and the company is essentially expected to bounce back to profit. That's thanks to a surge in its AI valuation. So for more on this, let's bring in our BI analyst, Kirk Boudry, joining us. And Kirk, we saw this in the last quarter as well, but certainly the value of its portfolio investments could be another big boost to the results.
Yeah, I think so. I mean, we're pretty sure that they're going to be able to take at least 6.5 billion or 1 trillion yen in valuation gains for OpenAI that they weren't able to do in the second quarter. So profitability, that's looking likely. I mean, OpenAI is SoftBank generally trades on what OpenAI is doing these days.
Okay. Anything around the tie-up with OpenAI? Can you talk a little bit more about that, please?
Yeah, I mean, so the big issue right now for OpenAI is that they're doing another funding round that SoftBank will probably participate in. So we're going to have two things to look at in the earnings. But the first is to get an idea of what the timing on that will be. Ideally, people would like to know what the valuations would be like, but it's very unlikely they're going to talk about that. But so the first issue is then, how much farther is SoftBank going to go investing in OpenAI? What's the valuation going to do? And the flip side of that is, where's the money going to come from? So they did roughly $50 to $60 billion in AI value investments in 2025. And that's taken their loan to value ratio pretty close to their internal guardrails, which are 25%. So to do more investment, they need to sell assets. And that's something that we're really keen to see what they have to say.
Yeah, they're known to make very big bets, sometimes, if not most of the time, out of consensus bets, and perhaps why the relevance of the company. But do you get a sense, Kirk, that if they do signal an openness and a willingness to invest more into OpenAI, do you think that will be received by the market as a good thing?
It is, and I think you're seeing like the surge in the share price coming into earnings is expectations that they'll have positive things to say about OpenAI. I mean, to go back to the point I made earlier that, the SoftBank shares are really trading around OpenAI sentiment, is, they hit a high of close to 7,000 yen back in October. And then there was concerns when the new Gemini model came out that OpenAI would face much tougher competition. I mean, SoftBank took the brunt of that sort of angst, and the stock came off that. But we've seen a recovery because there's an expectation that OpenAI is going to go out and raise $100 billion at a valuation that could be 50% higher than what the stock is valued at now. I mean, anything that sort of adds to that narrative is positive for SoftBank because they own $57 billion of OpenAI. So if you raise the value, then that's good.
Kirk, thanks so much for joining us this morning. That was Kirk Boudry there from Bloomberg Intelligence. And some of the other corporate stories that we're tracking today. The Shanghai Futures Exchange will prevent certain businesses that hold silver futures for hedging purposes from carrying their contracts through delivery. The move is in response to extreme supply tightness. The change takes place from the end of this month and could help bring the market back into balance by refusing additional long position quotas for hedges. Heineken's shares closed higher in Amsterdam. That's after announcing it will cut about 7% of its workforce. That's around 5,000 to 6,000 jobs, mainly in Europe. Rising prices and a trend toward lower alcohol consumption have triggered an industry-wide slump in beer demand. Takes us nicely to Asahi.
Yeah, it does, because we talked about this already. So 11% drop in January. The shares are slightly lower, so it's hard to say that the shares are reacting to that specifically. It's also worth keeping in mind that there was a cyber attack that did disrupt systems late last year. Just to put the number of 11% into context, right? Negative 16% in December, negative 19% in November, and plus 5% in October. So generally a down arrow story as far as beer sales are concerned. We'll be taking a short break. This is Bloomberg. Right, going into the Japanese lunch break, big outperformance coming out today here. Shiseido 15% to the upside. Fourth quarter earnings really boosting the stock price today. We're also looking specifically, well, this is the biggest jump in almost 8 years, just for context. A very strong earnings, of course. Forecast as well in terms of the guidance coming out of the company. China travel stocks, as we go into, of course, the busiest time for travel, really anywhere globally, any time of the year, just to underscore that point. We're down about 2 to 3%. You have inbound travel numbers. On top of that, Beijing City also talking to the platforms and saying, in terms of transparency of the pricing, just get that out, of course, and make sure that happens. China electric stocks coming up on your screens very, very shortly. There we go. We're looking at limit up in some cases there on the back of this promise to boost trade as far as that trade is concerned. Right, just ahead, Binance Co-CEO will be joining us here on set to talk us through the industry and the outlook. Lots more ahead. This is the China Show. Right, welcome back. You're watching the China Show. Just to tell you about the dollar weakness coming through in these markets, a persistent feature on the macro side of things, and we're now looking at the offshore renminbi on your screens, now poised for the longest winning streak in about 2 years or so. And of course, we've been talking about the 690 handle, and as you can see currently, based on the quotes we're getting, we are extremely close to that nice round number. Right, that takes us from the dollar China story to dollar Japan, where really we've gotten, well, a couple of things, right? The weak dollar, conversations around the Takaichi trade, and of course that being pulled back given the intervention risk at that. 152 right now, so really on the stronger side of the recent range. 40-year yield down about 11 basis points. Nothing much to tell you about as far as the equity markets are concerned, apart from sort of your idiosyncratic equity earnings stories there. We talked about Shiseido, SoftBank's on deck, and what they will say, signal, or anything in between in terms of the willingness and ability for them to put more money into OpenAI. Right, just a pivot here as far as the equity market. Let's go to crypto very quickly. There we go, the state of play. Bitcoin 67. We're off lows, let's call it, of the last 5 or 6 days. Broadly speaking, here's the Galaxy Crypto Index is concerned. 10-year look at that, and this segues us quite nicely into the broader scheme of things, in a broader conversation with Annabelle.
Thanks, Dave. Yeah, let's get more on the outlook for digital assets. Joining us this morning is Richard Teng. He's co-CEO of Binance, which is the world's largest crypto exchange by trading volume and also by users. So, Richard, great to see you again, and thanks for coming into studio for us. So, I want to get started with the events that have taken place really in recent months, because we had an interview this morning with Joe Lubin, co-founder of Ethereum, also the head of Consensus, but really talking about all of this volatility that we've seen even this year, stemming back to October 10 of last year, which was when we saw the Athena digital or stable coin or synthetic dollar essentially depegging on your exchange. What happened exactly?
No, so October 10 is not a crypto event, it's not a Binance event, it's a market event, right? So if you remember what happened on October 10, right? China imposed rare earth restrictions and US responded with 100% tariffs. And that caused the entire marketplace to down spiral. So U.S. equity markets went down 1.5 trillion in value that day. U.S. equity saw 150 billion in terms of liquidation.
I mean,
let me finish. So crypto market went down to a smaller extent, 19 billion. It went through all the exchanges. It's not only on Binance, it went through the centralized exchange, decentralized exchange on that day. So it is a crypto event, it's not a Binance event. And the bulk of liquidation happens around 9 p.m., UST time. And after the bulk of liquidation has happened, right, there are two isolated episodes on Binance. The platform operates 24/7. Trading engine was not impacted. There are two events. One is the asset slowness transfer. Mm-hmm. And then secondly is the asset price deviation that you mentioned on the USDE, right? So on those two isolated events, that has nothing to do with liquidation because the bulk of liquidation has happened. we compensated users to the tune of 300 million. On top of that, we took out another 300 million because we saw a lot of pain in the marketplace. Even though none of the other centralized or decentralized exchanges compensated users for liquidation, we did. We took out another 300 million to say we will share the pain with our users on that front. We stand together with our users. So we came out with that money. And I mean, people misunderstood to say that we will compensate everything for their liquidation, but that's not the case. That's market risk that you have to take.
The prevailing narrative is in the market, and including from the founder of Athena Labs, for instance, Guy Young, is that he would say that this is an episode that was very much isolated to Binance's exchange, and particularly to you or Binance referencing the so-called Oracle index on your own order book, not the deepest pool of liquidity. It's been, across the industry, I guess. Yeah. A lot of people say this was really just a localized event on your exchange, and you didn't see it.
No, it's not possible. Just look at public data. Everything is on chain. So if you look at the bulk of liquidation, 75% of liquidation has happened around, 9 p.m. At that point in time, and it happens across exchanges before the asset deviation prices happen, right? So everything is on chain. You look at independent observers, people look at independent data. Hasib from Dragonfly, who is well known in the industry, say, guys, look at the data. Whatever your allegations out there is not valid, right? So to all the logical people that are database, people that are sensible, look at data. It's not a Binance event.
Okay, yeah. But then that 300 million then that you refunded to customers, what does that tell you then? Is that any sort of admission of fault in this?
No, so as I mentioned, there are two isolated events, right? They are quite separate from liquidation. So there's a asset transfer slowness for 2-3 minutes. And that resulted in people that wanted to top up their accounts to avoid liquidation. So they are impacted on that front. And then also the price deviation that happens. So on that, we take full accountability. We compensated users 300 million. And on top of that, as I mentioned, we did something else that no other centralized exchange or decentralized exchange did. And we're proud of what we do. We came out with goodwill payments for our users. And that's what none of them did, right? So I just want to make sure that we put this on record. And for all the independent assessors, who are people who are data-driven, who are sensible, you can look at the records. It says for itself. It's all in public chain.
Yeah, okay. Just to mention, though, I think, a lot of people out there would say that looking at particularly the decentralized exchanges, they weren't seeing the same sort of any sort of irregular price activity. But
no, that's not true.
Okay.
There's a lot of liquidation that happens on decentralized exchange as well. In fact, the liquidation amount could even be bigger. So have a look at the data.
Mm-hmm. What do you think is the impact of all of the trading activity we've seen since that point? Because it's certainly been a period of extreme volatility and a lot of selling pressure across Bitcoin, altcoins as well.
Well, when you look at this type of events, right, this type of market events, it'll take time for market to recover. So on the retail side, we do see more muted demand for it. But institutional demand has continued to be strong, right? So if you look at institutional holding of Bitcoin, it remains around 1.3 million. In fact, in January, we saw institutions adding to that, right? So another 43,000 Bitcoin being added to the portfolio of institutions. I just came from Davos in January. So in terms of the financial institutions, top honchos, the corporates that I speak to, everybody is still very bullish. People are still deploying on the different areas of Bitcoin, blockchain, crypto. So the long-term momentum is very strong. I do urge people not to just look at one point in time, because in crypto, we do go through cycles, right? So for people like myself that have gone through several cycles, it's par for the course. But for retail that just focus, I just give you a different timeline, right? So 6 years ago, compared to prices now, Bitcoin has probably gone up 7 times, 6 times, right? So it's always easy to just look at current and present, but what is more important is to look at it, to have a long-term view of where the momentum. This industry is very resilient. We see a lot of building coming through, stablecoin issuance. In terms of market cap, it rose by 50%. I speak to all the big institutions. Everybody is bullish on that front. So we're going to see a lot more building. Reliable asset tokenization is coming through. All these are big usage of, crypto and blockchain technology.
What about the ETF outflows, though? Because that's where you've seen...
The market comes and go. At the peak of gold prices, there's a lot of inflow. Now you see outflow. But that's how asset prices are, right?
Let's talk about as well another stable coin that's on your exchange. This is USD1. It's heavily concentrated on Binance. Why is that exactly?
Look, so we are the largest crypto exchange. If you look at our volume vis-a-vis the next largest exchange, we are 5 times bigger. Even if you stack us up against the traditional exchange, we did 34 trillion in volume last year. I think Hong Kong exchange did about 8 trillion last year, right? So that just shows the magnitude of our activity, right? So in terms of the stablecoin space, for any stablecoins, we have like 15 collaboration across different stablecoin space. For any stablecoin, more than 50% of all stablecoin on centralized exchange is on Binance. You just have to realize that, right? So that's the magnitude and scale we are, right? So
at nearly 90%, it is unusual.
So if you think about it, when MJX invested in Binance as a strategic investor, they picked USD1 as the mode of payment. As a crypto native, we support different stablecoins. We took that as a payment. So that came in. So that accounts for a portion of the amount that you mentioned. But the others are not exceptional. As I mentioned, more than 50%, we hold more than 50%, most of the stable coins on exchange, centralized exchange, majority are with us.
Are you concerned? MGX, of course, is, well, first we should also mention that USD1 is, of course, very much linked to President Trump and the Trump family overall, and MGX, of course, being the Abu Dhabi investment vehicle that's also looking at a lot of different US investments. Are you concerned at all around the optics of that, of MGX choosing to invest in that way?
Oh, we didn't pick that. MGX has come out publicly to say that they supported USD1. They picked that as the mode of payment consideration. We, as a crypto exchange, we support all the different stable coins. As I mentioned, we have, more than 15 that we are really working very closely with on that front. So they picked that. And the truth is, USD1 was listed on other exchanges first, even before it was listed on Binance, right? That's a fact, right? So, and by being the largest ecosystem, largest exchange, any point in time, different players, stablecoin issuers will have conversation with us. We work with them to see how we can best to support this important utility in the crypto space. So we'll continue to work very closely with all the different stablecoin issuers, right? So recently we run a campaign as well on the Ripple stablecoin. And, we do that with different stable. Last year we ran a campaign with USDC, right? So those don't get reported, but the media like to just sensationalize certain things that they want to pick up.
Well, I think if there's like around $5 billion in circulation and $2 billion of that's from MGX, you're talking about 40%, so nearly half.
So again, we didn't pick that as the payment consideration.
Yeah. Let's talk as well about the operations of Binance day to day, because obviously you're in the co-CEO role right now. What does that look like exactly?
Well, actually, on a day-to-day basis, nothing much has changed, So, Yi has been the co-founder. She's now the co-CEO. She has been a very inspirational female leader, and she has been, instrumental in building Binance up from day one, especially on the user-focused front in terms of our product features, etc. I have worked very closely with Yi, for the past few years as co-CEO. We are a team. And our aspiration, our ambition is very clear. We have 300 million users by now. That pace of growth is phenomenal. In the past 2 years, we went from 170 million in early 2024 to 300 million by end of last year. So we are very thankful for our users' trust and support in us. And we see a lot more institutions, corporate onboarding. Last year, again, we see very robust demand on that front. Globally, we are the most regulated exchange, regulated in 21 different jurisdictions. And now we have a global regulator in the form of Abu Dhabi Global Market, meaning that we are the only exchange globally that's regulated on an end-to-end basis. No one else is regulated like we do, right? From customer onboarding to risk management to governance to security, etc. So all our users are subject to accorded that protection. So our aspiration is 1 billion users. We are going to push out a lot more new products throughout the course of this year. You have seen precious metals being introduced about a month back, and that has seen very robust pickup and demand on our platform. We are grateful for all the support on that front.
What's the role then of CZ? Do you answer to him in any capacity?
On a day-to-day basis, the leadership team, including myself, Yi, we work very closely with the board of directors. We also have 7 members, 3 independent directors, including independent chairman on that front. So we continue to chat out. But CZ, he is the major shareholder, as with all major shareholders in any big corporates. He have say over important corporate decisions. That's similar to all listed companies and all big companies in Asia.
Richard, great to see you again, and do join us back in studio or at the next, of course, consensus event, what's happening in Hong Kong this week. That was Richard Teng there, co-CEO of Binance. And a reminder, of course, of our new online feature. This is the Bloomberg Video Hub. Subscribers can explore live streaming, news, interviews, all of our Bloomberg TV shows, documentaries, reporter analysis, and more. So do check it out at bloomberg.com/videos. This is Bloomberg.
Welcome back. You're watching The China Show. Time for Trending in China, which is our segment, of course, looking at what's making headlines in national newspapers and sparking conversation across social media. You have Chinese President Xi Jinping making a rare reference to this corruption investigation, or investigations, plural here, in his Lunar New Year greetings to service members. That, of course, is on the front page news on the Communist Party-owned People's Daily. Let's bring in Min Lo, our China correspondent, to tell us what stood out to her as far as the state media coverage was concerned, specifically also on this one.
Yeah, so it's quite usual for President Xi to make his rounds before Spring Festival to give his greetings to different groups of people. So he spoke to non-Communist Party members, some industry groups, and he also spoke to the service members. And I thought what was interesting is he made this rare mention of the purges that has been going on. He mentioned what he calls the revolutionary fight against corruption and how it has been an extraordinary and unusual year for China. And understandably so, because this is coming just a month after Zhang Youxia, the vice chair of the Central Military Commission, had been placed under investigation. In the Central Military Commission now, you only have 2 of the 7 members standing because the 5 of them have either been expelled or placed under investigation. So there's only President Xi left and another newly promoted vice chair. So there's been a lot of changes. It spoke to the shake-up that the military has been seeing, and President Xi sort of appreciated the service members and talked about how they have proven their loyalty and proven that they are reliable and dependable, and urged them to continue to strengthen combat readiness during the holiday to ensure peace and national security and to respond promptly to any emergencies. And I think this really highlights all the changes that has been going through as China consolidates its power in the military to work towards, power projection further afield, especially given all the volatility we are seeing in the global environment right now.
You mentioned it's traditional for the president to make his rounds ahead of the Lunar New Year. Where else did he visit?
So he also visited a Spring Festival market and an elder care center, and there has been a video that is put out by state media online showing a very heartwarming visual of him surrounded by a lot of people, and they're all clapping along to what he said. So it's so it was kind of a heartwarming moment to show that President Xi, as a leader of a country with 1.4 billion people, he's still very much in touch with people on the ground, talking to some of these, aunties in the market, talking to delivery people as well. And then he visited the elder care center, and perhaps that also shows the emphasis on, the taking care of the aging population in China, the elder care sort of services that China wants to cultivate right now. He also visited a science and tech park, and again emphasizing that science and tech is going to be key for China's self-reliance. Nothing new, but again, the choices of where he went to really shows the priority of the country now.
Curated. Min, thank you so much. Min Lo, our China correspondent there on a Trending in China segment, and really quite telling and noteworthy where the president visited and, of course, what made itself felt as far as those areas are concerned. Just for our Bloomberg clients, if you're one of our subscribers, of course, you can rewatch that specific segment we just did, of course, with Min, or some of the other interviews that you might have missed across shows in the last couple of hours or so. TV Go is the function you run, of course, on your Bloomberg terminals. Welcome back. You're watching The China Show. Before we go, just a recap of some of the big developments across the geopolitical space in Venezuela. Of course, here you have the U.S. Energy Secretary, the big news overnight as we woke up here in Asia Pacific. You have Chris Wright saying Washington can help Venezuela raise its oil, gas, and electricity output this year. Our colleague Anne-Marie Hordern reports from Caracas on that visit and, of course, the challenges U.S. firms face returning to that economy.
It's an historic moment for Venezuela. The highest-ranking U.S. official is visiting the country, the first time we've seen this since the capturing of Nicolas Maduro. This is a country where the U.S. closed its embassy in 2019, and today we saw a cabinet official standing outside the palace in front of an American flag. Secretary Chris Wright of the Energy Department met with acting President Delcy Rodriguez. The two discussed business ventures and how to collaborate further when it comes to energy, mining, and electricity in the country. Secretary Wright said he came here with a message from President Trump, was that he wants to make the Americas great again, and he wants to transform this relationship. He continuously talks about you can transform a relationship with commerce instead of boots on the ground. I'm Amber Herdern in Caracas, Venezuela, and this is Bloomberg.
There we go. Anne-Marie reporting on the ground for us overnight. In some other world news that we're tracking this morning here, President Trump says he has told Israeli Prime Minister Benjamin Netanyahu that he intends to press ahead on talks with Iran. In a Truth Social post, Trump says nothing definitive was reached during their Washington meeting in Washington, but he insists that his preference was to reach a deal with Tehran. Now, Netanyahu's office, meanwhile, says that the two leaders agreed to continuously coordinate closely. Now, Democratic lawmakers have accused Attorney General Pam Bondi of, using the Justice Department to target enemies of President Trump. In a rather fiery House committee meeting here, she was also criticized for supposedly bungling the release of files on convicted sex offender Jeffrey Epstein. Now, Bondi said that the Justice Department has investigations connected to Epstein pending, but did not elaborate.
How many perpetrators are you even investigating?
First, you showed it. I find it.
How many have you indicted?
Excuse me. I'm going to answer the question.
Answer my question.
No, I'm going to answer the question the way I want to answer the question.
No,
Your
you're going to answer the question the way I asked it.
Chairman Jordan, I'm not going to get in the gutter with these people, but I'm going to answer the question.
How many have you indicted?
Again, the time belongs to
claiming my time.
The time belongs.
I think it's very interesting.
Claiming my time.
I think it's very interesting.
You can reclaim your
time. He talks about they indicted. The president said they indicted him twice.
Mr. Chairman, please stop the clock and restore his time.
Okay, here we go with these theatrics.
Yeah, quite an exchange there. Okay, it's fairly more straightforward as it pertains to markets. Have a look at where we are as far as some of the big movers are concerned. NetEase, and that's down to earnings, of course. That's NetEase Cloud Music is down about 12%. Net income down on the company. NetEase down about 30%. Year on year, although when you look at what the street is saying, maybe a soft spot in terms of a broader improvement as far as the pipeline is concerned. Right. Speaking of gaming and gaming pipelines, Baba, Tencent, Meituan, and Baidu leading declines, as you can see, quite substantially, in fact, on price itself. Hang Seng Tech is down, let's call it just under 2% on the benchmark, following days of some rather decent gains, actually. Going the opposite way, and as you can see, really on this AI trade, the new names against sort of the OG tech plays, Zhipu, which is 26% to the upside, really underscoring that trade and recent market price trend. Very quickly speaking, staying on earnings, just to tell you about Lenovo and Hua Hong on deck as far as the earnings deck is concerned here. To watch that very closely later today. And of course, we'll unpack this for you tomorrow, Friday the 13th. Before we get into that iteration of the show tomorrow, very quickly, Straits Times Index. We have the budget coming through later today. Watch that very closely in Southeast Asia. That's it from us here on the China Show. Insight with Haslinda Amin is coming up next.